Well, it looks like merger mania. Is it? British American Tobacco offers $47 billion to acquire the remaining stake of Reynolds American that it doesn't already own. And there's also a deal being talked about between AT&T and Time Warner this morning, as well as Qualcomm and NXP. I want to break it all down right now with Rich Peterson. He's Senior Director at S&P Global Market Intelligence. Rich, it's good to see you.
Good morning, Marie. Great to be here.
So characterize what you're seeing in deal flow right now. What's your take? Is this, where are we in terms of the best of the days?
This is the fourth consecutive year where there's been over $1 trillion in announced U.S. M&A activity. Though we're down year over year. Year to date, we're about $1.2 trillion. A year ago at this time, about $1.7 trillion. But you have to take into mind last year was a record year, $2 trillion in announced deal activity. The fact you just mentioned about the possible BAT buying the remainder of Reynolds, that would represent of the top 4 deals this year. Each of those deals have been foreign acquisitions of U.S. companies. So that's an issue that has not even been discussed.
So what's driving that? Is that a currency story driving that, or is these specific to each deal that you're talking about?
Well, I think specific to each deal, because the biggest one is obviously Germany's buyer buying Monsanto, but then you also have Canada's Enbridge buying properties here in the United States in the energy distribution sector.
Yeah, I'm glad you mentioned that. There's a story in the Journal today. Morgan Stanley stands to collect $120 million if the Bayer deal for Monsanto closes, $57 billion. So Wall Street's also real benefiting.
Well, that segues into earnings, because financials are the best performing sector in terms of third quarter earnings results, up about 12% so far. We had a great beat by American Express, the best beat, I think it's in about 7 or 8 years. Now that has come true by buybacks, through cost cuts, as well as some organic growth, but it shows a good management over there at Amex. But then also the investment banks have done well, especially Morgan Stanley in terms of fixed income trading. And now as we talk about deal activity, that's helping fee activity.
Exactly.
How much of that fixed income activity at the banks do you think is maybe just a one-off event that became right after the Brexit vote, where everybody had to readjust their portfolios, and that may just be a one-time blip? Yeah,
that's a good question. I think when Morgan Stanley, they did a lot of cutbacks. It can be more efficient and more rigorous in cost discipline. I think Brexit drew up a lot of opportunity. But I think if rates go higher in 2017, that may drive more opportunity.
In terms of the overall earnings picture, you've had a large percentage of companies that have beat, and it looks like, at least right now, not including this morning, right, that we're going to snap that 4 quarters of declines in earnings year over year.
Yeah. The good news is that this is going to be a positive quarter for earnings right now. The Capital IQ estimates are 0.2%. That's the bad news. It's very anemic. But then you have to X out energy. Energy is a 70% negative drag. So if you X out energy, then you see the improvement. But it's still a modest increase. And you look into the fourth quarter of 2016, expectations are 6%. And the hope is in 2017, as I maybe alluded to earlier, if you get some sort of bargain to repatriate some of the cash abroad, that could be sent for CapEx and for hiring, that can help earnings even more.
So go through the sectors. What's doing best this quarter?
Well, financials about 12%, technology about 5%, materials 8%. The laggards are obviously energy, real estate, which is the newly reclassified sector of the S&P 500, because that may in fact helping the financials, because now you took out all the REITs and property developers, and now you have a more streamlined financial sector.
And how much of this do you think is because of the financial engineering of all those share buybacks? I mean, it's kind of the Spanx and the push-up bra of the financial world, where you reduce the number of shares outstanding with these share buybacks, and so your earnings per share look a lot better, but it's only because you're dividing by a smaller number.
By the way, GE raised its buyback today by $4 billion.
Yeah. Well, I mean, that's the world we live in. The world we live in is sort of like a tripod. It isn't just purely organic activity. It's the buybacks, there's the cost containment, and also there's the growth organically.
So what are you looking at in the fourth quarter? Now you have a new report looking at M&A in the fourth quarter. Any expectations after the election passes?
Well, I think there's a lot of uncertainty so far. Going into we're only not even 1/3 of the way through the fourth quarter of this year. There's only been about $60 billion in announced deals. I think as we get the resolution.
18 days away.
18 days away. After November 9th, we should see maybe more deals in technology. I think healthcare could be very interesting, because if there's more regulation in 2017, some potential buyers may look to make deals now before any changes occur in the next congressional session.
That's a good point, because if they expect Hillary's going to win, and then we see price caps on on drugs, they may be forced to do deals.
Yeah. And one area, like even though M&A I mentioned is down year over year, one segment is leveraged buyouts. Private equity has been, modestly active compared to prior years. There's been about $70+ billion in LBOs year to date compared to about $60 billion a year ago. So that's a good sign.
So more private equity deals than sort of standard company over company?
Well, I mean, we had the one a few days ago where, Canada's Onyx bought the Midwest grocery store chain Save-A-Lot. I think also you have another deal with Vista Equity Partners. They're an active buyer in technology properties.
Good stuff, Rich. Thank you so much.
Great to be here.
Good to see you,
Rich.
Rich Peterson joining us there. Coming up next, is there a prescription to fix Obamacare? One of the architects of the Affordable Care Act is with us this morning.